Alexa, cancel. Okay, well, I guess let me get started. Good morning, my friends. It is 8:30 a.m. on March 30th, and it's a new week. So, good morning, and let's take a look at the markets and what was going on overnight. So, we can see overnight the dominant trade is basically straightforward. We're looking at energy long. We're long on defense as well. We're short on tech at the moment, but let's see what happens today. Everything is driven by this war. And at the moment, everything is very volatile because if something happens, it's just shifting the market. And the market is responding in kind. Today at 10:30, we have Powell speaking, and that has the potential to move the market. So we want to be careful about that. We also had some information this last week that indicated we might have a rate reduction this year, but maybe only one. But the big issue is we are in the fifth week of losing, and you can see that on the chart. And as well, today we have the April 6th deadline coming up for Iran to conform to the deals, or Trump is indicating he might attack their power plants more. That could then send oil higher and change this whole narrative of buy the dip to a market correction further. So that could be sort of what we're looking at this week, and it is partly a concern, I should say. Overnight, we saw the European markets mixed, Asian markets mixed as well. They started down, they went up, then they pulled back. It looks like our markets are all up today. We're about 1% to 0.8% up across the board. The Russell's up about 1%, NASDAQ's up 0.8, as well as the Dow and the S&P. I can see that Solana and Bitcoin as well are both up. Those are good indicators. What's not so great is the 30 VIX. When the VIX is at 30, that's usually a good sign to start buying like SPY and QQQ. It's pulling back right now. That's a good sign. I don't think the war is over, so I don't know that it's the time to necessarily buy. I like to buy when everyone else is running to the street. So what are we going to do today? We're going to look at levels. uh, we see that gold, silver, and platinum and copper are all up. They're all rebounding, with silver rebounding the best at 71.5. That's coming off of a low of around 67 last week. So that's great. I'm happy to see this move back up. At this moment, I'm not sure if it's buy more. I don't think so. I think if you have silver, I might take some profit here and then wait for another dip to buy. But I'm not really sure without taking a look at the chart, which we're going to do in just a moment. I also want to cover some of the other sectors, and you can take a look that overnight we see that most of the sectors have rebounded at least a little bit, like $1 or $2. So it's pretty good. Like right across the board, everything is up about $1, except for utilities. They're basically holding. They're up a few cents, but everything otherwise, all of the other areas are sort of rebounding just a little bit. That's a good sign. And what we're going to look for is that these new levels hold, hopefully. You can see on some of these, they've had like a double bottom, or they've had a spike down, and now they're reversing out. And that's what we're going to hope for. All right, let's take a look now back at these indices. And I want to take a look. And you can see here, this is the FTSE. It had pulled back, and now it's on its recovery. As well, the yen pulled back. It's starting to try to recover, but it didn't break out above this level of 51,885. We need to see it break above where my cursor is up there before we can call it any sort of reversal. And the same thing here in Hong Kong. It's not out of trouble territory, but it's looking better. DAX as well, the German DAX, it's on a downtrend. So all of these are on some sort of downtrend, and it's very concerning. I have not seen the trend completely broken yet. I'm going to go in a little bit closer, and now let's take a look at levels on the markets today. We'll start off with the Russell. So let's take a look at the Russell today. And you can see we're at 2486.7 right now. And that brings us up to about here on my chart on the 4-hour. What that means is we're sort of in the middle of the value area. And the value area is where most of the money is spent when people are buying or selling. So most of the trading is happening in this wide band here, which I call the value area. And then this area here where you see there's not a lot of volume, that's the gap. Mind the gap, because prices tend to move through volume areas and across gaps. So we saw that the Russell came down to the bottom of this value area. It bounced off 2429. That was the bottom of the value area. And now it's working its way back up to the top of the value area, which is around 2560, let's say. So we're at 2485. We have room to go up on the 4-hour. Let's take a look now at the 1-hour. We're going to zoom in a little bit. On the 1-hour, we're still on a downward trend, but we're trying to correct, and we're at the bottom of the value area. Bottom of the value area, again, is around 2469 here today, and I'm going to look for, on the 1-hour, the bottom of 2469, and I'm going to look for an attraction or this magnet here to 2528. And you can see that this 2528 is a lot of volume. And so it's going to act like a magnet, possibly even higher, up to the level of 2560, of pulling in those orders. And one of the good things I see now on the hourly is that we're above this trend line, and hopefully we can then reverse out. Our RSI numbers showing the stochastics are positive, and they're both aiming positive. So that's a good sign. So I'm going to look for an initial target of 2498 today. So I would try to get in at around 2480, let's say, and maybe work our way up to 2500 and play those levels. If I zoom in a little bit further to the 15-minute, you can see even a little bit better how we've been moving above this trend line up towards this level of 25 to 30 or so. But being that it's 840, I don't trust it. I'm going to look for a pullback down before the market open and then back up. As well, I'm going to look to see if we hold levels. So we're going to see if we bounce up to a level, pull back, and then continue moving forward. For example, if we moved across this level up to 2532, let's say, then pulled back to 2500, that would be another entry, possibly long on the Russell. Let's take a look at the Dow. The Dow has a very similar picture. You can see overnight it's been climbing. We have a lower level here of around 45,693 on the 15-minute, and then we would aim for some sort of reversal back up to the 46.8 level. Now, we have not made it past 47,000 in a number of sessions, so if we zoom out, you can see it's been weeks since we've been up at the 47,000 level. I would like us to reclaim that. If we don't, then we're still in a downtrend. And you can see that we're in this long downtrend. And even though we're bouncing up today, this morning, we're only midway on that downward trend. So this is not a place that I'm long or short necessarily. I would like to see it bounce up maybe to 46,000 or 46.5 even, and then go short from there. Let's take a look at the NASDAQ. NASDAQ has a similar picture. On the 1 hour, we're still on a downtrend. We're just breaking over this trend line, but we have not closed over it yet. So that's not a confirmation. You can see we're at the bottom of the value area here on the 1 hour, and it does have the potential to run all the way back up here, but it's going to take more than a session or two. You can see that basically on a session, we've been going anywhere between from 24.3 all the way down to like few hundred points. We've been having days of, you know, anywhere between 3 to 500 to even 800 point moves during the day, but we don't keep them usually. So what I would expect is we're up about 180 points so far for the day. I would expect, let's say, another 180 points or a couple hundred points, maybe bringing us up to 23.8. But then we reverse out. I don't see us breaking above this and continuing long unless it's really, really strong news on some sort of industrial level. Zooming in a little bit closer to the 15-minute, we're still on channels 2 and 3 on a downward trend. My first channel 1, is on an upward trend. We're at the mid area of this value area in the 15-minute range, so it's a little scary. I'm not ready to go long yet here. I would like to see some pullback before we decide to go long, or we see a run up and then like to 24,000 here, maybe a little bit lower at the 23.8 level, and then we might reverse back down again, unless it's a long day. So the question is, what does Powell say at 10:30 that's going to continue making the markets move in the direction that we want it? Let's take a look at the S&P. The S&P also, it's a little bit different picture though, because in the last 15 minutes it's been very strong. It's worked its way up to the top of this channel, and we may see the channel start to turn around, which would be good. This would look like a reversal back down if we hit a higher level. You could see on the hourly chart, all of the trend lines are down. We are reversing out off of a hard bottom here at 63.60 on the S&P, but if we zoom out on the daily, there's a lot of room still below it, and it does have the potential to continue reversing down to the bottom of the value area, which is around 62.20. That's another couple hundred points. So could we pull back more on the S&P? It's possible. What I would say is more likely to happen today is we go up. If we don't break into this value area above 66.59, so we have to go up another couple hundred points. If we don't break out of this, then we start playing in this lower value area, which has room for us to go down a couple hundred points. So that's the scary part. So, when we're looking at this, if we don't break over this level, we go back down. Let's take a look at copper. Copper is up overnight. Now, copper is a great long story. I don't think we have enough copper, and as long as we don't have a recession, copper is needed for manufacturing and for all sorts of production, whether it's cooling, piping for AI, or if it's electrical wiring. Copper is just always in demand, and there's a limited supply. Now, it's a commodity, so of course there's a lot of it, but not when you're talking at international levels. And so the copper is just needed. I love buying copper. I think around here, when it came down to the low fives, like 5.25, even here at 5.5, I think you can hold copper long term. So you could look at proxies like Freeport-McMoRan for copper, or ERO for copper. And so if you look at FCX, which is Freeport-McMoRan, you can see on the 30-minute chart, they're looking pretty strong. On the 4-hour, they're looking ripe for a rebound. Their channel 1 is pointing up, while the other channels are down. On the 1-hour, you can see that although channel 1 is sort of mixed and channel 2 is a little on the downward slope, channel 3 is really upward. I would prefer to buy it in the low 54 range or high 53s. We're at 57 right now, but I do see this keeping on going up back to the 70s and higher. So depending on your time frame, you can look for an entry around 53 to 54, or you can even buy it here if you're long term and you just want to see what's going to happen. Let's take a look at gold. Gold is up 1.5%. It's at the top of the value area, and it's bouncing around near a resistance level of 4,600. I would expect us to hold this level, but if we don't, then we bounce down back to the the lower here, the 43.89, like 43.90. We're at 4,600, so you're talking about a possible 200-point fall if it doesn't hold this level. I think it will, and I'm looking for gold to recover in general as a hedge to inflation in the markets, etc. So what I would say is I'm not buying it right here. We're too high on the short term for me. I'd like to see a little bit of a pullback before I go long. But if it does continue this trend, it could rip right through this level up to the 4,800, because we scoped this out earlier, and you can see there's a big value area gap above 4660, and we're almost at 4600, so we don't have a lot to go. We're up 1.5% today. If we go up another 1.5% to make it a 3% day, it could then easily make it to a 6% day. So this could totally run. It has the potential in the daily. Channels 2 and 3 are both positive on my daily. On my 4-hour, all the channels are pointing down, but the 1-hour, they're all positive. So it's potential for a reversal. Now, if I wanted to play a proxy, I could look at something like Newmont Gold, NEM, and you could see their chart basically matches very closely to gold. They're at 104 right now. I would like to get in closer to 95, 96, but they have the potential to go back up to the 130s. So, I mean, talking about like 30% there easily. That's a pretty good move. Let's take a look at silver. Silver's a big mover this morning. It's up 2.5%. We're at the top of the value area, and you can see we're at some sort of level of resistance on this yellow line at around 71.70. So right now we're at 71.50. If we don't break above this level, the story keeps the same. It's a downward day, and it can go back down to 66. If it breaks above here, then we're looking at blue skies, and there's a value area gap from 73.5 all the way up to 78. So that's a $5 move that you can look for at least, if not more. So I am a buyer of gold. I would like to buy here a little bit lower than here. I prefer to get in at the 66 level. I already have silver, so I'm not adding to the position at the moment, but if I do see a pullback, I would. Let's take a look at platinum. Very same picture for platinum. It doesn't have a different story. On the 1 hour, it's still on a downtrend, although the channel 1 is up, and channel 3 is sort of on a caution level. We're at the top of the value area, and that's around 1960, I'd say. We're at 1923 right now. But I'm not sure. So you can monitor these levels. These are levels where I would say you can go in and go out real fast, but platinum moves so quickly and so much because of the leverage. It's very hard to play with. I would be looking for platinum to go down long term, meaning the next few days as a reversal out of here, unless we hold and move back towards this magnet of the value area of around 2150. And that would happen if we see the end of the war, or we see some really great news of manufacturing coming back, and the demands for platinum, for example, catalytic converters or whatever. That's a big demand for platinum. Let's take a look at the oil and natural gas real quick. So let's see, MCL. You can see oil is over $100 a barrel. We're at a kind of a resistance level at around 100, and we're at the top of this value area on the hourly. I would not expect oil to really spike up from here at the moment, but it's always a possibility. You could see on our channels 1 and 2 are kind of in cautionary state. They're going sideways. Channel 3 is still pointing up on the 4-hour. So it does have the potential to continue running, but I wouldn't buy oil here. I would be a seller of oil here in the hopes that it would come back down. I don't know, but I'm not recommending you to do anything at the moment with oil. It is above the trend line. Everything is pointing up. So any sort of pullback could be an indication that the prices will continue to move up. Although, you zoom out and you look at the weekly chart and we're really high. So do we stay here? I don't know. We were down in the 60s last week. We're back up in the hundreds this week. It's like a barcode, up, down, and up, down. I think we've got some kangaroos running the stock market, maybe. But yeah, that would have been a good buy if you could buy oil down in the 80s and back up here and sell it in the hundreds. You could see this is the value area. Top is around 115 on the weekly chart, and it's low 60s on the low end. So once this war is over, I would expect oil prices to kind of fall, and we shouldn't have this worries anymore. But you come in on the 15-minute chart, and everything is looking green, positive long. So we're above trend line, we're above support. Any sort of pullback to 100 and long from 100 back up to 102 on oil. We could take a look at natural gas. Natural gas is also down. It's been playing levels. On the bottom side, 2.9, and we're at 2.92 right now. And on the high side, a little bit above 2.96, so almost 3. That's the range that we've been pretty much playing. I think, if it gets down to 2.9 flat, you might buy some UNG, maybe United States Natural Gas Fund, which is that would trade at around 1175, and then you would look for an exit at around $12 or so if it spiked back up. Not a huge range, but it does have some potential to make some money. You can see it was just at 12.3 last week. So 11.74 to 12.3 is not a big move on the 15-minute. On the 1 hour, you can see we were all the way up at 13 from this low 11.75. So I would add to UNG and look for some sort of reversal, possibly long on that. Let's take a look at Bitcoin. Because Bitcoin has been an indicator for me, letting me know what the market is planning on doing. I listened to the price of Bitcoin on the weekend, and I saw that it was rising slightly, which gave me hope that today would be a better day, and it is. So we see that Bitcoin is up at 68,000 and rising. Again, we're at the bottom of a value area on the 1 hour chart, although all three of my trend lines are pointing down on the 1 hour. We're above the trend line and at the bottom of the value area, around 67,000. So that's a great sign for a possible reversal. And you can see on the 15-minute, everything is pointing upwards and converging at around 69,000. So if we can get another 1,000 points today, which would make the day maybe a 4% day for Bitcoin, that's totally doable. I think Bitcoin could possibly even break 70,000 if it continues this trajectory. So I would be playing long on Bitcoin if I see any sort of pullback. Right now it's at the top of a value area on the 15-minute, so I'm not buying here, and we're not yet at 930, so that's going to change things. Let's take a look at Solana and see if the story is the same. Solana is also trying to rebound. It's at the top of a value area at the moment at around 84.60. If it can break above here, then we can look at the 90s again on Solana, and that would be a big move. It's up 2% today. I think the bottom it set the last week was 79, a little bit above 70, a little bit below 79. So we definitely have the potential to see a reversal on Solana. I'd like to buy in at around 82.5 and then ride it all the way up. But I am tempted to just say, if you can get in at even anywhere around this level of 84 and change, 84 and a quarter, it has a great potential to continue riding back up just based on the value area. The trend lines are all pointing down on the 1 hour. The 4 hour, I have channels 2 and 3 positive, so that's actually a good sign. And you can see there's a big value area gap right above us on Solana. So if it breaks above this 94, we're looking at 120 and possibly above. This is a great area to buy, I think, on Solana. Somewhere in below 80 is where I would love to accumulate and then look to go long. But I think, we're at the bottom of this value area, so definitely potential on any pullback today for Solana to go long. Let's take a look at the euro just to see how the euro has been playing out. It's been trending downward. We're on the 4 hour chart. We're near a very strong support level of around 1.1514, 1.15. You can see in the last 6 months, it's touched down here and come all the way back up to 1.2. End of the war, I see this reversing back up to the 1.2. There's a lot of good money there. At the moment, you're going to have to just sit and suffer if you buy down here. But I think patience will pay in the long term. So actually, it doesn't look that bad or bleak, even though you have this strong move down. All three channels are pointing down, but they're pointing down to this support level. So do we bounce off of it, or do you look for the reversal back up and some sort of indication, and then you buy long? That might be the better move. You know, if you see it break above a certain level, then you buy. Um, you know, unless you really have, you know, strong conviction that the euro is going to rebound, and um, you want to hold through this downward trend. For example, you can, but each each move of the tick, meaning each of these little ticks moves, which is 0.0001 cents, each move is $1.25. So if you were looking at moving down to here, to the 1.154, that's what, like 16 times $1.25. So it's not a huge move, but depending on how much you're playing with, you know, that could impact you. And that's the micro, but you can move up to a bigger contract like um, the 6E, where every tick is worth $6, and then that move becomes a lot more expensive. Or there's the E7 as well. Yay, so many options to trade, but I do think that this does have potential to come back. So, you know, if you wanted to trade this, you could trade something in the smaller range like the micros. You don't need a lot of margin. You only need about $330 of margin to buy the euro. The downside is that it still costs you money to make the trade. So it's going to cost you some amount, like let's say $6 to make the trade to get in and out of it. So you know, you have to make sure that the stock moves more than the $6 to just cover your cost. But that shouldn't be too hard. And we're about a half hour away from the market open. It's 9 a.m. And so far, the tick, it looks like it's moving up. The VIX looks like it's holding. And oil is holding at 100. Natural gas is at 2.87. Gold's 4,600. Let's take a look at some of the other most interesting stocks. We call those the Mag 7, or there was FANG. They had all sorts of different names. Let's look at Google overnight. And we can see that Google is coming back off of the lows from last week. It hit a low of 270. If we see 274 as a low here, it could continue reversing back out on the hourly. If I look at the 15-minute, 273 looks like support, and we have resistance at 279 on a reversal. I like Google long term just because. And if you zoom out, my channel 3, channel 2, those are still positive, and they converge at around 280. So we're at a converge point, I think, for Google. If it holds here, great. If not, this is a really big value area gap between 270 and 250. That's a 20-point drop. That would be really significant if we did fall through there, and then we would have the potential to continue down to the bottom of this value area, which would land at around 240, and that's where I would buy long. Let's take a look at Tesla. Tesla is up overnight. It's at 365, off of the low where it was. It touched, I think, around 360. We're still in a downward trend. We're at the bottom. We actually crossed through the value area gap. We're at the top of this value area. This is a very long-term trend that I mapped out. You can see this blue diagonal line going across. it brushes the top of this value area. I would hope that it could hold this value area. If not, we might transcend, might go right through this value area to the bottom here at about 315 before we would reverse out up back to the 400s. Long term, love Tesla. I think they have so many things going on technology wise that they're a powerhouse of performance. But you could see the prices moved rapidly through this value area gap. There was not a whole lot of trading there. Let's see if it can rapidly move right back up to the top here of about 390. I'd like to see that. So let's take a look on the 15-minute and see what's the potential for today. We're at the top of this little value area. There is a gap. Mind the gap between 365 and 370. So that might be a great place to trade. If you're a long market open, you might see a bounce up there. Take your profit and walk away. Isn't that an idea? Channel 1 is on the up. Channels 2 and 3 are a little bit on the cautionary on the 15-minute. The 1 hour, everything's pointing down. So that's why I'm a little bit cautious about it. But we are above the trend line and we're at the bottom of the value area. So Tesla does look sort of interesting. Let's take a look at Amazon. Amazon is at 201. This is a very low price for Amazon, and I think Amazon is a wonderful company. I like Amazon. I buy from Amazon. I don't know why the price is so low. We're at the bottom of the value area at 199. I think this is an interesting opportunity to buy Amazon, even though channels 1, 2, and 3 are pointing down. I would love to see on the 4 hour, let's say channel 1 pointing up, or even on the 1 hour, I'd like to see channel 1 pointing up. I don't have that yet. That would indicate a reversal, and I would say then you would want to say for a swing trade, it's a good opportunity to buy. Now, if you're long Amazon just as an investment, we're not in a bad place to buy, right? It's potentially going to pull back another few dollars, but if you're talking about holding it for a year, I don't think, buying it at 195 or 197 or 200, that $5 difference will make a huge difference in your wallet when the stock is back at 245, right? It won't matter if you bought it at 195 or 199 if the stock is all the way at 250. Let's zoom into the 15-minute and see what's going on. We have channel 1 is positive, although 2 and 3 are down. We're at the top of this value area. So we can, on Amazon, break above 201. We are looking at least 206, at least, if not 211. So I like Amazon long today, and I think you have the potential to make some money on a swing or a day trade on Amazon. I think this week might be a positive week, and then, everything is hunky-dory. If it's not a positive week, then, we know the alternative. But Amazon does have the potential for a reversal here. We're at a resistance level. We just have to break above 200, and I think we're good. Microsoft is at 360. What a what a tragic story. Microsoft is really just fallen from graces. It was in the 500s and now it's in the 300s. We're at the bottom here of some sort of value area, but channels 1, 2, and 3 are pointing down. They don't have I have no strong indication that Microsoft is ready to reverse. We're at the bottom from the year almost, and look at this bell. We were all the way up at 550. Now we're at 350. This is terrible. Zooming out on the weekly, this gives you a little bit better picture. And you can see I mapped out here. It lines up with the 38.2. We have supported around 340 on Microsoft. So there's not a whole lot of volume below 340 to, let's say, 320. I'd like it to hold this 350, 360 level for a potential reversal back out. But look how far below this trend line we are. That should mean that we reverse back to the trend line, right? We always kind of reverse to your mean. So if we're this low here, a reversal to the mean means we should come back to 400 rather easily, if not 440. And you can see even on the weekly, we're at the bottom of this value area. interesting place to buy, right? Bottom of the value area is a good place to buy if you are looking for a long-term investment reversal. It's not a day trade, it's a long-term investment reversal that I'm looking for in Microsoft, and this is a great place to enter. I would not be buying puts or selling calls here as a matter of practice because I don't have that direction. Oracle, on the other hand, is at 140, and again, all three channels are down on the 4-hour, on the daily. We do have some flattening on channel 1, which is a good indication, and we have a bottom of around 137. It's at 140 right now. This is a low area. They're about to pay a dividend. It might dip a little bit more on that, but it may not impact it because it's only 50 cents on a $140 stock. Although Oracle was at 300. So do we see it come back to those levels? I don't know. All I can see is we're at the bottom of value area. I don't have strong trend lines saying it's a reversal yet, so I am not looking to buy Oracle, but you might be able to play a bounce somewhere between 138 and 160. So I would be looking for plays in that level if you're going to play with Oracle, but it's not something I'm looking to play with. Let's take a look at Meta. Meta had a big lawsuit last week that they lost. Not big in terms of the dollar impact. It was a small number, about $6 million. But the implication is that they can now be sued for teenage exposure to Meta. And that could potentially cause the stock to go down. I think this was, a big pullback. You could see it went from 600 all the way to 520 on that news. So a little bit of overreaction. It's now rebounding back to 530. I personally added some shares last week because I felt that we're too low, and I'm looking for a long on Meta in the long run. Right? So I'm happy to, let's say, start selling calls on the position. If you have 100 shares, let's say, if you could buy that money shares, you could sit here on the shares, sell options against it, make 5% easily, I think, by selling calls like close to the money and risking losing the stock, so that you can get that reversal, that extra alpha out of there. It's a big gamble at $530. That's a lot of money to play with, so it's not something I would do. But you can do the poor man's version, which is playing with options. Again, that's a little dicey if you don't know what you're doing with options. So I'm looking for a bounce off of 520 back across this value area gap to the 580 levels. But that would require us to have some news, I think, about a settlement on those, or an overturning of those court cases, something to indicate that Meta is on a reversal pattern. I don't have that yet on the 4-hour. I don't know if that I have that on the 1-hour, although we are starting to move above the trend line here, even though all of my trends are pointing down. We're at the top of the value area. If we break above this level of, let's say, 535, we could see 543 all the way up to 550 in the next few days, the next 2 days. Easy, right? I could see us going back to 550 on Meta. All right, we got another 15 minutes till the market open. Let's take a look. What do I have here? So I do have some indicators that are saying we should be looking at gold, and that's what's coming up. And these are some proxies for gold, and they're all, that's what's showing up on my scanner this morning. Like CDE Kadoour Mining, it's at $17, has the potential to work its way to 19. That's a really interesting idea. You could buy this here, buy 100 shares at $1,750 or so, right? And then see if you ride it up, and then you can even sell the coal maybe against it for $1.20 at 17.5. So you would be able to or even a buck at 18, right? So now imagine you bought $1,700 worth of the stock, and then you sold the $18 call for 1 month out. You pocket that $1, so it makes your net effective cost $16 on CDE. And as long as it stays below 18, you get to keep that dollar. If it goes above, you lose the stock, but you've now made $2 in less than a month on 17, which, it's a little bit less than 20% in 18 days. So this is a very interesting opportunity, right? Not a big risk at $17. For a small account, you're talking about $1,700 that you're gonna lay out, but you get $100 back right away. So it's only $1,600 you're laying out right away. Your downside risk is, a little bit like half of that. So your downside risk would be about 16 and a half. So if you saw 16 and a half, that's where you would exit on CDE, which is really the bottom here, right? That's like 16 is your bottom. I would prefer obviously to get in down here, in low 17s, but this does have the potential to continue running, and you can make a little money, right? As we move up, it's moving at around 50%. So if this moves, let's say from 17 and a half where we are now up to 19, that's $1.50. So you would make about 75 on the option. On just one. And you're talking about, just $1. So almost doubling it. That could be a good move. All right. Let's see, what else do I want to look at this morning? Take a look. We've got some items on my watch list. Alcoa has been something that I've been interested in. Last week it was around 54. I liked it there. It's back at 64 now. I think Alcoa, they do aluminum. You could see their range is 66 on the top side and 55 on the low side. So I'm going to look for an exit soon at around 67, 68. Just take my money out if you have Alcoa. But what a range. And you could see this jump. It went from 58 to 64. So that's great. And they have earnings coming up mid-April. I don't know if I would be in the earnings, but within the next dollar or so, I think you're taking your profit at 66. So we're at 64 right now. Wow, what a jump. Okay, what else? Let's take a look at GE Vernova. GE Vernova on the daily, we're at 865. Big jump overnight, but not out of the realm of untradeable. We're still on the 1 hour, pointing down on all three channels. Look for an entry, lower 800s, I'd say, on GE Vernova. It can come down another 50 points before it continues to go back up. That's kind of how I would look to trade it. It's below the trend line on the 4 hour, although channels 2 and 3 are up. Channel 1 is still kind of pointing down. On the 1 hour, all three channels are pointing down. So that's why I want to converge down a little bit lower, 830 as an entry, to go back up long on GE Vernova. Constellation Energy Group, let's take a look at them. They're also still this long trend on the 4 hour. Looks like it's down. Yeah. But 290 would be a low. Lower side entry, 285. We're at 305 right now. And I would look for an exit at around 320, 330 area where you could see the Fibonacci level is and resistance. So it does have the potential to reverse out of here. On the 4 hour, the channel 1 is up. On the 1 hour, all of my channels are up. So, and look at this value area gap. Very interesting. I would prefer to get in at 300, a few dollars lower, and then ride it up to, let's say, 315 to 320. That would be an interesting trade on Constellation Energy. But you can actually hold them long term. I think long term they're good. South Korea has been beat up. I don't know what's going on with South Korea. We're down already. Many days. Already a month. I don't know. So we're at a bottom here on South Korea at around 120. I'd like to see 135, if not higher. So just set an alert. If you see 120, it might be a buy. We're at 121. Still a buy. I think long term, it's a buy. ASTS, Space Mobile, it's up a couple dollars today. It's $80. We're at the bottom of this value area. I think this is a long-term interesting opportunity to get into space. And you can look for $100 on the top side. So today, I would play this as a trade perhaps if we can continue this reversal. Let's take a look in the 15-minute just to get a little closer detail. And you can see we bounced off a bottom here. If the rest of the market's going up, this is going to go up with it, and we have the potential to make some money here. Let's take a look. Options, they're a little bit pricey on an $80 stock. You're looking at $7 options at the money or more even, with not a ton of open interest. That's the key when you're looking at options. You want open interest to see what's there. But let's say you bought 100 shares, it's about $8,000, and then you could sell the 90s and still pocket $4. That would give you $4 downside protection to about 74. That's below here, and that's pretty good. So on the 1 hour, 74 is really the bottom, and my channels are pointing to say that we can get back up to the 90s. So this might be a really interesting trade to get into ASTS Space Mobile here, and then you could sell calls against your position if you wanted to. Marvel Technology, they're on an upward trend. Channel 1 on the 1 hour is down, but they're above the trend line. They're in a value area gap, moving towards the top of the value area of 98. They're at 96 right now. So you got $2 move easily baked into Marvel. Credo has been beat up on the last number of sessions, weeks. In fact, they're down at 94. They were in the 120s. They do have the potential to reverse, but right now they're kind of bearish. And I'm looking for some positive long-term stuff. Let's look at LWLG, Lightwave Logic. I like this. They have an interesting story. We're looking at a lot of these technology companies that are going to be able to make data transfer faster using light. So this is one of those companies. I would like to get in closer to 6.5. Look for a top of around 8, or even higher as it recovers long term. Laser, Nightlight, Enlight, that's another technology company. This one, I believe, is for vehicle automation, but I'm not 100% sure. Again, it's been going sideways with a bottom of around 62, high around 72. It's at 66 right now, so it's sort of in the middle. I'm not playing it here, but I would add to my collection if it's in the 60s, and then look to sell in the 70s. Lumentum Holdings, somewhat of a similar story. I would like to get in at 680 and hold long term. I don't see a trade there today. that I want to take. ONDS, I started buying some of it in the 10s. It's now in the 8s. I think the story stays the same. This is a buy long term, and you're looking for a reversal out of here. So you could just add to your collection of ONDS and just hold it. I think long term, it then will have the potential to make it out. AAOI, another applied optics for data transfer, very interesting. They're at 90. They're at 100 already today, top-ish of the value area, but I would try to get it in the 90s. Even here at 100, I think it's going up to the 120s again. It'll take time. Market has to reverse out, but this could be part of a longer-term portfolio for you to kind of hang on to. ServiceNow has been on a downtrend, just ripped down. We're at the double bottom here of around 98. We're holding at 100. Could potentially bounce up another 10%, to this 120 or more. Who knows, 20%, if it would reverse out. The channel 1 is flattening out. It's pointing to 115 on the daily chart. On the 4-hour chart, everything's still pointing down. 1-hour chart, everything's pointing down. 30-minute chart, now you can see there is channel 1 pointing up. We're above this trend line. We can hold this 100. We then traverse this value area gap to 102. And so ServiceNow does look interesting as a reversal. Nebius, we're at the bottom of value area on the 30-minute chart. And if the market moves upward today, that looks good. We can definitely see 33 from 28. That might be a really nice move. This is DXYZ. What am I saying? DXYZ is an interesting stock. We're at 28 on DXYZ, and that's DXYZ holds some of the new SpaceX, and but it's very little percentage of the actual DX. I think YZ. I'm not sure, but it has that new SpaceX in it. Yeah. Let me pull up. There we are. CIEN, Sienna Corporation, again involved in the data transfer stuff. We're at a resistance of around 410 right now. So if we don't break through here, we could continue to pull back, but it may follow the same story as some of those other stocks that I was mentioning, like AAOI. And if that's the case, then it can continue going back up. Let's take a look at Bloom Energy. Bloom Energy is down. We're at 132. I think we're at an area of support. If it doesn't hold this 130, 129 level, then it goes through the value area gap and drops precipitously. Bloom Energy, but I don't think that's happening. I think energy is going up still, possibly. Depends where in the market. But look at that. We're at the bottom of this value area. Long term, it's been positive on the daily. Channels 2 and 3 are up. Channel 1 is down, but let's look at the 4-hour and 1-hour. Bottom of the value area, big, mind the gap. We could fall through here if that happens, but if not, then we reverse back up to the 160 level. That would be wonderful. We're at 130 now. So on the 30-minute, we have the reversal. We're at the bottom of this value area. It looks like an interesting trade. Bloom Energy at long term. We're about 2 minutes away from the market open. And let's continue taking a look at some other stonks. Yep. A lot of gold coming up on my scanner today. So here we are. I'm just looking at the indexes. We're still at about we're at 1% up on the Russell and 0.8% up on the other indexes. We're still holding 2.9 on Bitcoin and 2.3 on Solana. That's pretty interesting. Normally we don't have Bitcoin going up more than Solana. Gold is holding 4,600. It looks like silver's at 71 and platinum's at 1913. We're still moving up. Oil is still moving up. We're at 101.68. Natural gas is still moving down at 2.884. The VIX is falling at 29.74. Let's look at how some of these numbers match up on SPY. And you can see we're at SPY 640 right now. We just broke over on the 1 hour the value area trend, and that's the market open. Let's see what's happening. Do we have some movement? The Russell pulled back just a little bit. It's at 0.6, NASDAQ 0.6, S&P 0.8, and Dow 0.8, pulling back from the open. Let's zoom in just a little bit to the SPY. And you can see on the 5-minute what's going on, what happened here. So we're jumping around. And we were up here before the market opened. We spiked up, pulled back a little bit. We're holding at 639. Let's see if we can hold the 638 level. Let's pull up this chart. IWM, we're at 244. SPY is holding at 1% up. The diamonds are holding at 1% up. And the NASDAQ is just below there. Well, I'm going to take a break for a few minutes. I'm going to go get some coffee, and I'll be right back. In the meantime, enjoy the charts. What's what do you have? You want attention? You want to trade? What do you need? What do you need? Listen, I gave you a. That's not it, man. It's not a hangout. Want that water? That's what it is. Hello, I'm back, folks. What did I miss? So SPY is holding at 0.65, Diamonds at 0.7, the Q's at 0.58, and the Russell at 0.37. You could see SPY opened up strong and then pulled back hard. Here we are on SPY on the 5-minute. We opened up at around 64.66. We pulled back down. We're below this trend line. The trend lines are still up on the 5. Let's look at the 15. My trend line 1 is up. My channel 1 is up on the 15, but 2 and 3 are still pointing down. And we were at the top of 3 on the 15 minutes before, which is why I was suggesting we're going to continue going down a little bit and pull back. So I think we pull back this morning, and let's see if we come back down to this level here. If we could hold this level of 64.49, then we might be okay. But if not, then we're going to continue going down. I want to see it hold here on the S&P. Looking across the market sectors, we've got XLB up 1.3%. XLE Energy is up 1.3%. Utilities is up 1.2%, while real estate is up about 1%. XLK Technology, that's only up 0.3%. It's at 130, while financials are at 48. XLB looks like it's at the top of its value area at the moment. I think it's had its run. XLP consumer staples, they've been beat up, but if there's some sort of market reversal, they have a potential to come back. Industrials got beat up. They're down at 160. I don't know why. I would think that the war would make them want to go up, make it want to go up. XLE, it's at 63 and change. I am so shocked. It's really gone up pretty high. XLE, that has things like Chevron and ExxonMobil in it. Meanwhile, you have healthcare at about 144. We're at the bottom of this value area. It might reverse out of here. Let me see the scanner if we got any new items come up on the scan. Let's see if I got something bigger on the scan. Nope. Nope. This morning it's just showing me gold on this scanner. What movers do we have? Let's take a look at Micron. I think Micron is up today. I apologize. Micron is down today. Micron's down significantly, 3%. I don't know why. And they're falling pretty fast, it looks like, on this 15-minute. They're off $12. Wow. What's on? Amazon is up. That's good. Let's see what other movers we have. ONDS is down 8 to 8.5. Kratos is down to 69. 69.36. That's not great. Kratos is really kind of falling apart. If I open up the 4-day, you can see we're at the 68. That's the bottom of this gap, and it is support. So I'd like it to hold 68, 63. Even though we're about 69, so we're close to the bottom here on KTOS. I think, I hope. CoreWeave is at 72. That pulled back really hard. I was thinking, it was going to continue back to the hundreds, but it pulled back. On the 4-hour, though, we have support at around 70. So 71. We're falling into support on CoreWeave. Rocket Lab pulled back. I don't know what's going on with it. It's gonna fall down to about 48. I don't think Rocket Lab has it in it at the moment. All my channels are pointing down. It's not looking pretty. We fell even below the 61 Fibonacci. Although we're at some level of support, we're in a huge gap right now. I don't like Rocket Lab. EWY, we're at a precarious position. We have to hold this 119, otherwise we continue falling down, and I don't like that. So I would just hold here if you have it. I would consider adding to it or buying it if you don't have it, in the event that maybe it turns around. Maybe not. Maybe not. Maybe I take that back. Maybe you just wait and see. I'm not really sure what to do with EWI. It doesn't look great. If you have it, I'm not ready to sell it, but I would have a stop loss, I think, at about 115, because if it continues falling, it really can just drop precipitously below this 119 level. USAR, rare earths, another one I picked up a while back at the high, and I've just been holding it, unfortunately, thinking that it's going to recover, and I don't think it's going to recover anytime soon unless we see an end to the war, at which point it can recover back to maybe my entry level, but I don't know that I'm going to be making any money on it. I have a big loss in this position, but I don't have, percentage-wise, I don't have many shares of it. It's just a percentage thing. And so I think I'm going to look at maybe trimming this in the next few sessions to generate cash for something that might be better. I don't know. I don't like the momentum on it. The momentum is pretty high. The tracking looks pretty low. It has the potential to go down to 13, like another $2 from here. So maybe at 13 I would buy it, or 12s. That would be interesting, but I don't want to sit through the loss. Let's look at Jets. Jets is the airlines at 23. This is a buy in this area. I think the airlines will come back. I think travel is not dead. It just might get a little more expensive, but it's not dead. You could see Delta Airlines, for example, they're still trending up, even though they're down today. Southwest, uh, they're down, but they might recover. American Airlines, they're really down. Wow, they're really down at 10. Look at that. They're off for the year. There's nowhere for them to go but up, right? I mean, unless they're going out of business. What about JetBlue? JetBlue, yeah, you want to buy it around $4 and sell it around $5. So we're in that territory for JetBlue. I think that means that jets might have some potential to reverse out of here. Let's take a look at Broadcom. Broadcom down at 300. This is just not a great place for it to be. Maybe it's going to reverse out of here. That would be really interesting. I'd like to see that happen. Cisco is down today, just mildly, and they've had a nice run. I'd like to see it pull back to the 70s before I would get in there. Oracle's at 139. They're not doing so well. They're barely holding on, but they're holding on at least. Palantir is around 143. Let me see if I can pull up Palantir easily. And they're in their value area. So I could see them going from 140 back up to 160. So I'd be a buyer of Palantir. I think they have a lot of potential, especially with the war. We're going to find out that their technology has been used pretty significantly. NVIDIA is flat today at 167. They're pretty low on their trend line. They've been tracking sideways basically for the past year. So we're at a bottom. They should come back maybe. Maybe. Why not? I think they will come back. I like Main Street Capital. They pay a nice little dividend. They pay it out monthly. I've been doing pretty well with them long term. They pull back, obviously, because of the war. Great opportunity to buy long. I don't think they're going out of business, but let me pull up the weekly chart on them just to show you. This is Main Street Capital. Let me clear out the drawing set so that you have a better visual. But you could see they've been pretty strong overall. We have it looks like the bottom of value area was about 53, which it broke through. The bottom of the next value area is 41, which I don't see them going back to, right? I don't see them going all the way back down to 41, but I do think that we are close, if not next to the bottom of this value area, which would land us at around 49. We're at 51 today. It's basically, I'm saying, $2 down. You could start adding, I think, in this range and look for a long on Main Street. Plus, it gives off a nice little dividend. So I would say long-term Main is pretty appetizing. VXUS, that's the total international stock market. I like the idea of buying the international stock market as a part of your long-term hold portfolio. It's at 74.90 today. It's up 0.3%, but you can see on the weekly chart, we've pulled back significantly. We're near we've set it up some sort of support here. You could see if I draw a line, it goes through many, many weeks of it touching this line and either not going over or touching and not going below. That's a good indication that we have strong support there. We're at 74.26 that's the support, and then you look for a long to go to 85 or whatever else. We can zoom in a little bit, look at the 4-hour. What does that look like? And you can see I think 73 right just below that is the value area of it, like mean, and that's going to act like a magnet to the price, and then you can go long from there if you like. Let's pull up silver or SPY. SPY is giving back still from the morning. Let's look at the 5-minute on SPY. So we're off Are we off the low? No, we're pressing the low. We were up here this morning at 640. We pulled back down. We're at on the 5-minute. We're still trending up. Let me zoom out to the 15. You can see channel 1 is up, pointing towards 640 where we started, but channels 2 and 3 are pointing down towards 625, 630. And I think that's where we're going. I think we're going down another few points on SPY. Let's look at Robinhood. Robinhood's at 66. I like Robinhood long from 65 on this 15-minute chart. On the 4-hour chart, we're pointing down. I don't have any good indicators on the 4-hour. On the daily, we're sort of really bad. Really bad. Yeah. That's not good. Oh, wow. COHR. Let's look at COHR. They're down almost 5% today at 230. They do line up there a few times. They've hit here 530 and kind of, but there's a big value area gap all the way down here. So we can come all the way down to the 190 on COHR. I don't think so. I mean, all of my channels are pointing up. On the 4-hour, even the sideways ones are still at the 225 level, not much below where we are. The 1-hour, we're at a bottom on Coherent, which might make it interesting. Let's look at Citi. Citibank is at 108 right now. I'm looking for Citibank to go back to 115. You could see on the 1-hour, the channels are all pointing down, but at 108, we're toward the bottom of this value area with hopefully some sort of recovery. So let's say if we pull back to 106 or 105, I would buy Citi and go long on Citi from there. Meta is up. It's doing well today. It's up 1.33%. It's up $7, just about to 532, trying to make some sort of recovery. Lily's been killing me. Lily is just on a downtrend tear. It's at 890. They were up over 1,000, a month ago, and now they're really just been destroyed. Novo Nordisk as well. It's at 35. Every time I think it's at the bottom, Novo Nordisk doesn't disappoint, and it keeps finding a new bottom. SEC Limited, I don't know what's going on with that. It's been underperforming for the longest time. You could see basically like half a year. At this point, they have a support, it looks like, at 77. There's a big value area gap above it, but this value area means it could traverse all the way down to 50, which would be just horrific. Now, here's the thing. If you think that the company's not going out of business in long term, it has the potential, then you can start accumulating, but I would do it very gently. And I would do it, in pieces, very small pieces, like one share at a time kind of pieces. You know what I mean? Because I don't know. But you see that, if these are flattening out, it might be an indication that it could turn. But we're at the value area, and it tends to move through value areas. So I don't know what to say about this. I don't have a reversal on C. I do hold C long term, and I'm underwater on my position. I'm holding. I'm just going to hold, and I think long term it'll be okay. But if it does break below this 77, I might just exit out of here and say, forget it. I don't need this. I don't need this agita, as they say. Let's look at PPA. PPA pulled back today about 1%. It's at 162. This does represent a low for PPA in the value area. They just paid a tiny little dividend. They are a aerospace and defense ETF. They should be doing well. They are traversing, however, this value area gap very quickly. They may pull back all the way to this 158 if they don't hold 162. You know, PPA, I'm surprised. You know, I think it holds things like Lockheed Martin, you know, or Northrop Grumman. But Lockheed is at 611, bottom of the value area. I would like to see it go up from here. I'd like to see other like defense stocks doing well. I don't right now. You see Palantir pulled back. It's at 142. It's at the top of this value area. It traversed down the value area gap, and you know, I'm concerned that it might come back down to the 120s. You know, we have support down here, 125. It's been moving in this kind of like block, right? So if it moves block by block, we're looking at it coming down to the 120 level, right? So Palantir can theoretically come back to this 120 level. Might be an interesting time to sell, let's say, a call on it, unless you really think it's going to reverse out of here. Let's look at the 1 hour on Palantir and see if it tells a different story. I would prefer to sell calls when it's up at the 160 level than it is at the 140 level. Or buy calls here might be interesting. It's got to hold. It's got to hold. This is kind of scary. Look at this. If it falls here, it continues down another 20 points. Yeah, Palantir is not in a very good place. Let's take a look at Hack. That's a cybersecurity ETF. Let's look at the daily on Hack. It's up 1%. I like Hack over here. The idea of Hack, it's at 73. I think it's going back to the 80s. I'd like to get in at 70. Maybe a few dollars lower. DY, this was a recommendation from Seeking Alpha, and it's been underperforming. I'd say this is one of those things you kind of just have to hold if you have conviction in their picks, but if you don't, then it's getting scary because it could just continue going down this value area, and you have a big gap between 335 and 300. So it could really fall through here quite easily. It did fall below 335 where there was support. So you're in this gap already. You could see. And it does have the potential to just continue falling. Whew, that's scary. So let's see what else we got. Let's see if we have any more trades for today that are coming in on my scanner. Okay, interesting. Let's see what comes up here. Is AUX, another gold company. This one's at $1.40. Interesting. You could buy a lot of shares of that, right? And watch it move around. I would try to get in at $1.30 and look for gold reversals to come back, and then you can sell it at $2 if you like those really, really inexpensive ones. Today it looks like, you know, my scanner's coming up with a whole lot of materials. The Mosaic company is one of them. It's at $25 right now. At channels, my channel 1 and 3 are down. 2 is up on the daily. It does look like you have support at 23. And then I would look for exits at around 30. on Mosaic. But anytime you have to plant something, you need like the fertilizer and all that. That's Mosaic. So you need Mosaic. And it looks like it had a double bottom here at 23. This might be an interesting area to buy, at 25, and then look for at least 27, right? At least a couple dollars here on Mosaic. Barrick Gold is down. That's on my list today. Silver ETF on the list today. It's down. Let me just switch over to see what the sectors or markets are doing. So silver's holding at 70, which I said I didn't see it going over 72 there. It's holding at 70. We're up 1%. Gold is up 0.75%. Platinum's up 0.2%. So we're giving up early gains from today. The indexes are now starting to fall. You have the Russell is negative, as well as the NASDAQ is flat. The S&P is about flat, and the Dow is up just slightly, but it basically is flat. The VIX is back at 30.4, so we're still in that high range. Oil is up at 102. Natural gas is falling even harder to 2.86. Gold is at 45.58. I have silver at $70, and the euro is at 1.15. This is a really low number for the euro. Copper at 549. Yeah, we're up. We're pretty. Copper is pretty cheap. 546 is the local low, I would say. And so if we hit 546, I would be a buyer of copper to go long. Solana pulled back to 84. Let's see what's happening with the NASDAQ. We're still flat at 2300s. My entire scanner is all materials today. Silver and gold. That's the story. Now let's take a look at Teva Pharmaceuticals. I have some Teva. You could see a few shares of it over here. And Teva is holding at this 28.9 level. I think Teva is an interesting company long term. It has to hold this 28.9. Otherwise, it can fall all the way down to this 24. Ooh, scary. 4 hour, all my channels are down. On the 1 hour, though, they're all kind of pointing up except for channel 1. Channel 1 was pointing down, which was a nice convergence for me. And I'm looking for this to hold this level as the double bottom and reverse out of here. Another one I'm holding is VICI, and when we're sort of in the same shape, I'm looking for the reversal here as the bottom. I charted out 2683 to be a support level. We dipped down below it briefly, and now we're back above it. We're at the bottom of this value area. I'm looking for us to traverse at least back up to the top of the value area and then continue from there. So if we zoom out to the daily, you could see VICI properties. It's pretty low, plus it pays a nice little dividend, 45 cents on a $30 stock. Not too shabby, right? So you can collect some dividend while the stock is in the dumps, and when it comes back and everybody's happy, then then you're happy too. Now, what's going on with Grab Holdings? Grab Holdings is at $3.60. I don't know. It's like garbage, man. It went from 6.5 all the way down to 3.5. Like went out of business. I don't even know. Like, what's the deal with it? Like, that's crazy. Look at this move. I have some Grab. I don't know what's going on with it. Bottom is around 2.5. Well, 267. And there was support at 380. We crashed through that. We're going down to this 2.7, I think, before we even possibly go back up to the previous levels. And that'll, all of that will depend on how people start trading Grab again. But at the moment, it looks kind of dead. Going back to the indexes, you can see natural gas is really just low today. It's pulled back pretty far. We dropped down below previous levels of support. We're now trying to find new levels of support. We broke this value area and we're now in the gap on natural gas on the 4 hour. Let's see if we zoom out. I don't even have charting much below here. At some point, I don't know, does natural gas become free? And does that mean my home heating bill gets lower? Because my home heating bill was natural gas and it keeps going up. I don't understand if the price of natural gas is falling, why I'm paying more. I mean, look how cheap natural gas is. 2.86. And we were up here in the threes. I mean, like, and it's not like, oh, just because of the war. Like, we've been in the threes. Well, we had that spike in the beginning of the war. It went up to 7. That was crazy. But, normally even we can be in the 3s to 5s. So I don't really understand why we're this low at the moment. It's like, here's free natural gas. I don't know. So maybe, does that mean you buy and accumulate UNG? Just buy and accumulate it and hold it. And like, it might not happen right away. It might take a month, but you might make, like 10% or something. You can make it like $1, a little bit less than $1. Possible. Buy UNG. Let's look at what UNG calls would cost. Going out for a leap, I'm just curious. Like $2.5, but it's expensive. It's like 20% of the price of the stock. Likewise, if you bought 100 shares of UNG for $1,100, what could you get back if you sold options against it? You could sell, let's say, the May and get 50 cents for 13s. That would be the equivalent of making $13.50 if it goes back up to 13, right? So if we go back up to 13, which is the value area kind of top, it would give you the extra 50 cents to 13.5, which would be the 50% Fibonacci. That'd be a nice, that's a decent trade if you sold that. If you bought the stock here, 1160 to 13, that's, you're making a couple dollars now. So it's like 20%, right? That would be a nice move if you could manage doing that. Meaning, and it's relatively safe because you're holding the stock, you're selling the call. So you're just laying out about $1,100, but you're getting back. You're laying out $1,160. You get back 50 on that. I don't know. It's not a lot of money. It's just maybe safe, you know. Um, the numbers don't do a whole lot better here, you know, and it's because the stock is down today, 5%. It's a pretty big move, but I think it's interesting. Hmm. Let's go to Uber. Uber. Uber's up today 69.4, 69.3. We traversed through the area where I thought we would. I highlighted it in orange, and it looks like we're trying to rebound from there. On the daily, we're pretty low for Uber. These are the kinds of times when you buy the dip. Yeah, Uber can go to 63. It could theoretically lose 10% from here. I'm not saying it won't. But you have to have some conviction long term in what you're doing and the market, like the market direction. I think Uber is going to come back though. Yeah, it's disappointing. Google's not doing too well today. I'd like to see Google do a little bit better. Just give a shout out to Sean, my daily YouTuber. And I want to say hi to my friends that are watching, like Ira or I don't know who else watches. We're an hour and a half in. So if you're actually still watching now, it's pretty good. Yeah, I'm bad on Google right now. I missed this one. When Google fell below that 300, I should have dumped it. But I've been holding Google long term and looking for this reversal, and it's just not happening. Yeah. It really needs to hold this 273. It's not good. I keep walking that level down. You could see these three trend lines on the 4-hour are all pointing down. The 1 hour, they're all pointing down. We're below 275 is the trend line. So we're below the trend line. We're hovering near it, which is good. But this is not a good direction overall. I think long-term Google will come back, though. Google belongs in the 300s, I'd say. So I'm just going to sit and hold this for now. We break below this 270 level, then yeah, I probably have to dump it because it's just too much of a loss to sit through. Because yeah, it could then fall to here to 240, right? If it doesn't hold 273, it could fall all the way to 240. That's a big risk. The Nasdaq is still holding at 23,000. It's basically flat. Everything's flat, more or less, on the indexes. The gold, silver, platinum, that's up. Copper is flat. Bonds are up slightly. The tick is up about positive 200. That's a good sign. The VIX is falling. Again, a good sign. Bitcoin is holding at 67.9. That's good. Solana's at 84. I'd like to see us hold here on Solana and Bitcoin. Copper is flat for the day. I was hoping for a little bit more. Let's see how SPY is doing today. We're up $1. Let's zoom in. I think you've got a level down here at 633. We have a top here at 637, so there's no trade at the moment. You have to wait. And that's it. That's the concern, is like, why is the Russell down? NASDAQ is like, it bumped up, pre-market and pulled back now. So it's setting a range for the day. And, you could, if we looked at the 1 minute chart, just to show you, the opening range was up here. It was at 23,538 on the top. And then it dumped. The first 5 minutes, it went poof. And it traversed this gap. Now we're at close to the top of the gap. So what is it going to do? Is it going to fall from here to the bottom again of this value area? Or do we reverse back up now? 1030 will tell us everything. I think 1030 we should see some bounce back. But I don't know if we're buying it here yet. I'm still a little high if we're going down. Let's look at the S&P. Interesting, kind of same story. You see we had a high up here when we opened, then this is the low, and then we just drop down here. Now there's a value area and a traverse all the way down. I don't see a long trade. What about what about the Russell? What are we doing with the Russell? Same story. 2455 on the bottom, for a reversal back up, but everything's pointing down right now. So I don't see that we have a positive. I think we have some pullbacks today continuing. Silver, gold, platinum, they're giving up gains. Bitcoin is still holding at 67.8. Solana's holding at 84.5. Copper's holding at 5.5. Oil is accelerating up to 102. Natural gas is forming the bottom, I think, at around 2.869. The tick is pulling back. It's at negative territory again, sort of neutral at minus 43. I consider plus or minus 1,000 to be very aggressive on the tick. All right, we're almost at 10:30. It's 10:20 right now. We have another 10 minutes to see what happens on some sort of reversal, but I'm just reviewing over some indexes and seeing what's happening here today. We've got some big movers. Let's see what else came up on my scanner today. Oh, Procter & Gamble came up. That's a different one. Let's take a look at PG. Here's PG's chart, Procter & Gamble, the 1 minute chart. You can see we pulled back to 142 earlier. We're at 143. Let's zoom out to the daily. Wow, look at that. I like Procter & Gamble here at 142, even at 143. I think we keep going up Procter & Gamble. I like Procter & Gamble long. Look at that chart. Okay, I am going to take a look at Procter & Gamble. Let's zoom in a little bit more to the 4 hour. It's looking really promising, I think, on the 4 hour even. I'd like to see it, break above its current level and hold, but I think that's where it's going. I am going to send out an alert to my crew to look at Procter & Gamble. Let's see what else is coming up on my scanner for swing trades. I have just a lot of materials, a lot of gold, silver, miners. Everything that's coming up is just like one one gold stock after another. Mosaic, that's the only one that's sort of different at 25. All of these are different mining companies. Their charts all look identical. Give or take here and there, but basically you're buying silver and gold long term here is what it looks like. On this scanner. All right. Let's see how we're doing here. Let's pull this back up. And we're still kind of negative on the Russell, but we're flat on the NASDAQ, mildly up on the Dow and the S&P. The tick is entering positive territory strongly. We're at 354 and rising, while the VIX looks like it's settling a little bit lower, below 30. Natural gas is still at 2.867. Gold is at an interesting place at 45.52. It's at the value area, and point of control. So that's kind of interesting. We're a little bit above the bottom, but silver is at 70.63. We're at the support on the trend line, which is also aligning with the top of the value area. I don't know that we're going to go back down to 68 today. More likely, I think we continue going back up, but I'm not sure if you're ready to buy here or not. Platinum, we're at the point of control as well. So it's just interesting. We're near the point of control with silver, but gold and platinum, they're at the point of control. Copper is at the point of control on the 30-minute charts. So what happens from here? Do we go back up? I think so, because I feel like this morning we saw the market pump, and now people are taking profit off of that pump. So I'm not sure if we continue settling down, or do people say, you know what, market was pumped this morning, it pulled back a little bit, it's now another opportunity to pump it up again, and is that what we see? So we see, right, let's say Bitcoin and Solana, they're sitting at their trend lines positive, and Bitcoin's at the bottom of a value area. So it has a very strong potential to continue going up from here. Similar with the NASDAQ, right? Similar with the Russell, similar with the Dow, the S&P. They're all at a bottom of a value area, and they're looking for an excuse to go up. That's what we're looking for, but we don't have it. So let's see. We have a few minutes, and then Powell is going to talk, and that's going to move the markets. So let's see what happens there. Definitely have the market moving in the next few minutes. I hope you're enjoying the show. Today, I'm having a great time just live streaming and talking with you. I would love to hear some feedback from you. So if you want to share some comments, by all means. There's a delay, like a few second delay, a minute delay maybe. I'm not even sure, but I can see the stream, it has some sort of delay to it. We're 2 hours into the stream this morning, and thank you for joining me. It looks like those levels that we talked about earlier this morning are coming into play. You could see the S&P, we're at the bottom of this value area. The Dow, we're at the bottom of this value area, and we've got some structural support here. Russell, we blasted through support, but the NASDAQ, it looks like we're sitting at the bottom of this value area on the 30-minute. So let's see if we can't hold here another 2 minutes until Powell speaks. Wow, we've got some big movers today. I just wanted to point out, show you AAOI today. It's off 12.5%. Let me just put that there. You can see better. We're at a support around 85, it looks like. But mind that gap. Oh my God, look at that gap. That is a crazy gap, right? If that gap closes, you're looking at 30-point drop. That's kind of scary. AAOI. Laser, it's off 12% as well today. I think the same kind of story. Yeah. It has a little bit more support down below, but it's still not looking that great. Okay. Bloom Energy, it's off 10% today. We marked out a little bit earlier where I thought it might go. I'm surprised, but we landed at this Fibonacci support of 38.2 on the 4-hour. But I fear that it will continue to traverse this gap and perhaps all the way down to 100. That is a possibility. Fabrinet, also a good company, long-term growth. I think this has potential. We're at the bottom of this sort of trend line on the 4-hour on channel 2. You could see on my daily, all 3 channels are pointing up, but support is a little bit lower, closer to 435. I would look for more of an entry in the 435 range than the 500s, but it does look good long term. I mean, just look at that. LITE, nice pullback, long term, good growth. I would. These are stocks. I think I would just, some of them I would just add to. Planet Labs, interesting. I'd like to see it closer to 26, 24 rather. Yeah, I'd like to see Planet Labs closer to 24 before I would say I want to go in long on Planet Labs, but Planet Labs does have some growth, a possibility. Nebius pulled back a lot. I would like to see it pull back to 84 before I would go long in it. Again, it's at 95. It's off 5.5% today. That's a big move down off of the highs that were closer to 130s, 140s. That does mean it has the potential to go back there, but I think it pulls back before it goes up again. I'm not sure. Corning, I like Corning long term. Corning is such a great company. They just do amazing things with glass and technology, frankly. I would like to get them closer to the 125 level than the 130 that we are now. Intel is down to 42. It looks like it's close to a support on a long-term growth. That might be interesting. Let's take a look at the indexes. Anything happen? Powell is speaking at the moment. It's 10:30. So let's see if we can't find some more information. Let's pull up Financial Juice. So Iran is currently exporting 2.5 to almost 3 million barrels of oil a day, including 1.5 million of crude, which is the average it was exporting last year, but now it's doing it at a higher price. So they're making money, interestingly enough. Powell is speaking. We can listen
in an economics doctoral program, but rather with a deep study of institutions and laws. Raised in Washington, D.C., he attended Princeton University, where he earned a Bachelor of Arts in Politics in 1975. He then attended Georgetown University Law Center. While earning his law degree, he also served as editor-in-chief of the Georgetown Law Journal, one of the world's most influential and prestigious legal publications. He then started a career of extraordinary impact and breadth. He distinguished himself first in the private sector, working in investment banking and private equity, notably as a partner at the Carlyle Group, while repeatedly answering the call for public service. He served with distinction as Assistant Secretary and then Undersecretary of the Treasury under President George H.W. Bush. In 2012, he returned to public service as a member of the Federal Reserve Board of Governors. His nomination to serve as chair in 2018 by President Donald Trump, and then his renomination to serve as chair by President Joe Biden in 2021, stand as testaments to his bipartisanship. Chair Powell approaches economic stewardship with a philosophy grounded in empirical evidence, institutional humility, collaboration, and public service. Like the greatest Fed chairs in our history, Paul Volcker, Ben Bernanke, Chair Powell advances the interests of our nation and not his own, sometimes at great personal cost. We are immensely privileged to have him share his insights today. Please join me in warmly welcoming the Chair of the Board of Governors of the Federal Reserve System, Jerome Powell.
Thank you. Thank you. Thanks very much.
So I'd like to start at the beginning of your career. You studied politics and then law, and then eventually pivoted from that to public service. Were you thinking about public service and economic policy making at the start, or did all of that come as a surprise later? And how did you decide to make the pivot when you were in the middle of your career?
Let me start by saying, David, thank you so much for having me, and thanks to all of you for being here today. It's great to be here. I've been looking forward to this. Yeah, so I took macro and micro my freshman year, and it wasn't as interesting to me at that age than some other things, so I wound up majoring in politics, actually specializing in Africa. It's fair to say that my freshman major was acoustic guitar. My parents gave me a Martin D35 for high school graduation. They must have regretted that because that's what I was really working on mostly. But I did finally figure out what I wanted to do. And when I graduated from college, I really had no plan, but I did have one thought, and that is to have a career in the private sector, but also to do public service intermittently. And I was thinking about people like George Shultz, who was famous, had many economic jobs, and others who had done those sorts of things. And I grew up in Washington, D.C. My parents were not, my dad had fought in World War II, and he had been a U.S. attorney, but they weren't people who were terribly plugged in politically. I was very interested, though, in those years in public policy and in trying to create a life that was partly private sector and partly public sector, and amazingly enough, that's kind of what happened.
Great. So now, jumping right to the present, we talk about the Fed as a unitary entity, but of course, the Fed is led by the Federal Open Market Committee. There are 12 voting members. You, despite being chair, only have one vote. And in normal times, there's a lot of consensus. Everyone's in agreement. Lately, there's been some disagreement. There's been votes to keep interest rates the same, but some members of the FOMC have decided instead to vote to decrease interest rates. How does the disagreement on the FOMC make your job harder as you describe the path of economic policy going forward?
You know, I don't think of it as making my job harder. I think it's, and I've found throughout my career that when you have a really difficult problem, it helps to hear from all sides. And in a way, for example, when I was a private equity investor and I was looking at supporting a transaction that I wanted to do, I really wanted to hear from the smartest people. Tell me why it's a bad deal. Tell me now before we do it. And I just think you don't really know how much you believe in something until you've had somebody literally try to take it apart. So I welcome that at the FOMC and at the Fed generally. And I think it helps us make better decisions. The Fed has had a tradition of governors not dissenting, but that's really not typical of other major central banks where there's more dissenting, or I mean, they're different, depends on the central bank. And to me, what matters is the dissent thoughtful? Is it helpful? Does it help? Does it express a point of view? Can you stand behind it and say, yeah, that's very thoughtful? And that kind of a thing is not bad. And it doesn't hurt with communications. You know, I think a situation like the present situation where, you know, there's sort of downside risk to the labor market, which suggests keep rates low, but there's upside risk to inflation, which suggests maybe don't keep rates low. You've got tension between the two objectives. And I think to try to expect unanimity at a time like that, where it's really quite historically challenging, it would almost be misleading to be really confident in which way that should go. In fact, it's been said that confidence is what you feel before you really understand the problem.
Okay. let's turn to the Fed's balance sheet. In 2008, 2009, that great financial crisis, there was a massive expansion in the Fed's balance sheet. And then again in 2020, under your leadership, there was a second vast expansion in the Fed's balance sheet to address these two economic and financial crises. The balance sheet has since come down a bit, but it still sits at over $6 trillion. So I'd like to hear your views on how efficacious this vast bond buying program has been, both in the 2008 and then again in the 2020 episode, and also hear your reaction to the critics who say that the Fed has become too big a player in the bond market. The Fed has become too influential. There's been a muddying of, as according to the critics, of monetary policy and fiscal policy. Do they have a point, or are they wrong?
So I think the place to start with that is the problem that people were struggling with from about 2008 to 2022, let's say, in central banking everywhere in the world is once you've cut interest rates to zero, do you have anything else you can do? Let's say you cut interest rates to zero and the economy is still clearly not flourishing and it wants more support. So do you just say, well, we're done, we're out of ideas here? And there were two ideas that were followed in the global financial crisis, one of which was to buy assets, longer-term assets, and what you're doing there is you're buying longer-term government-guaranteed securities, which would hold down longer-term rates, and that should stimulate the economy. Or also forward guidance, which would tend to hold down forward rates as well, or just rates generally. So we did those two things rather than do nothing. And I think in the first instance, they were both efforts were successful at restoring market function and at restoring financial stability. At the beginning of the global financial crisis and the pandemic, we had massive problems of market function. They were solved. I think the question, getting to your question, David, of the macroeconomic effects is a much less certain question. I don't think there is an accepted answer, but I would just say there's an oceanic quantity of research on this, and overall it tends to find that buying long-term assets does lower interest rates and does provide some support for economic activity. And I guess I'd be in the camp of thinking that there's something in that, but it's hard to quantify it. And I think, different people have different views on how much those effects could be. The other side of it is, QE is thought by the critics to risk all kinds of other things. So, for example, you could buy too much of the Treasury market and it would stop functioning well. We have not seen that here. At the very beginning, there was the thought that it would be inflationary. We have not seen that, or that it would threaten financial stability or even create inequality. So we haven't really seen the downside risks. At the same time, the last thing I'll say is, I remember before I took over as chair thinking, I'll almost certainly never have to do quantitative easing. So what's that expression? Man plans and God laughs, something like that. So it just, the pandemic came around and we needed to do a lot of asset purchases in a big hurry, and we did. So far, no Treasury Department has ever said, stop doing that, you're supporting the economy too much. Maybe that'll happen someday, but it hasn't happened yet.
So let's talk about the dynamics of inflation since the spike in 2022. Inflation has been coming down since then, but it still hasn't reached its 2% target. Some have argued that that last mile is extremely difficult, and to obtain that, we will need a recession. Others have argued that you've gotten us very close and you'll get us the rest of the way. Are you concerned about the time duration of the path from the high inflation of 2022 back to target? It's taken time. We're not there yet. Is that a destination we'll reach, or are you concerned that the last mile will prove very difficult?
So we will reach, the FOMC is and will continue to be committed to getting inflation back to 2% on a sustained basis. That's the place to start. So I feel like we had pretty much gotten there at the end of 2024 against the predictions of almost the entire economics profession. when we raised rates a lot and very quickly in 2022, 100% essentially of economists were forecasting a recession. We didn't have one. Actually, we had 23 and 24 were both very strong years as the supply side healed and as our higher rates had some effect on inflation. So by 2024, you had the economy growing at 2.5%. You had inflation in the 2 plus a few tenths on a 12-month basis by the end of the year. And you had the employment market. You still had the labor market at essentially full employment. So I would call that a soft landing. We had it there. Then since then, we've had to face a much smaller source of inflation, which is the tariff inflation is visible, and we think it's really just a one-time price increase. That's been our thinking since the beginning. Right now, we think it's adding somewhere between 0.5 and a full percentage point to inflation, but that's a much smaller thing than we saw during the pandemic inflation. And and of course now we're facing events in the Middle East, which will certainly affect gas prices, and we feel like our policy is in a good place for us to wait and see how that turns out.
Great. So let me turn to the current crisis in the Middle East and the effect on energy prices. Indeed, this classroom is familiar with that question from the last problem set, where we asked, how would you advise the Fed to respond to the rising price of oil? And we teach that when there's a demand shock, it's a pretty natural set of recommendations that emerge for the Fed. But when there's a supply shock, like this energy price shock, there's trade-offs that the Fed has to juggle. How do you make those trade-offs in general, and how do you make those trade-offs in this particular instance? And can you help everyone with their piece?
Well, maybe they should tell me. Sure. So you start with what you said. Our tools work on demand. Higher rates will tend to moderate demand, lower rates will tend to stimulate demand. And when you have a supply shock, our tool doesn't have meaningful shorter-term effects on supply. So when you have a supply shock, the first question is, do you respond to it? And the classic question has been around energy, just in general, not really speaking about the current situation, although I'll get to that, I guess. But energy shocks have tended to come and go pretty quickly. Monetary policy works with long and variable lags, famously. And so by the time the effects of a tightening in monetary policy take effect, the oil price shock is probably long gone, and you're weighing on the economy at a time when it's not appropriate. So the tendency is to look through any kind of a supply shock. But a critical, essential aspect of that is you have to carefully monitor inflation expectations, because you can have a series of these supply shocks, and that can lead the public generally, businesses, price setters, households, lead them to start expecting higher inflation over time. Why wouldn't they? At the end of a certain number of years, the inflation is now just higher, and that can happen. So you monitor that very, very carefully. Also, in the current situation, you have to be mindful of the whole broader context, and the broader context is we're still, we've been coming down close to 2% post-pandemic, but we've never actually, gotten right and stayed at 2%. So it's been a while. And we're very mindful of that fact. Inflation expectations do appear to be well anchored beyond the short term, but nonetheless, it's something as we will eventually maybe face the question of what to do here. We're not really facing it yet because we don't know what the economic effects will be, but we'll certainly be mindful of that broader context when we make that decision.
Great. So you've been a powerful and vigorous defender of the independence of the Fed with respect to monetary policy. You've also been collaborative with administrations with respect to financial regulation. So under President Biden, you collaborated in a program of increasing regulation. Under President Trump, you've worked together to reduce regulation. So on the one hand, we've got an independent Fed with respect to monetary policy, and on the other hand, we have a collaborative Fed with respect to financial regulation. I don't think there's a tension there, but can you explain to us the two different approaches and how you understand them?
Yes, so start with monetary policy. I think there's pretty broad consensus in both political parties on both sides of Capitol Hill, and our oversight, by the way, is Congress, not the administration. But pretty broad agreement that on monetary policy, the Fed needs to be fully politically independent, not reactive to political things at all. We just need to do our job and stick to our knitting. Regulation is a little bit different, especially since Dodd-Frank, where the Dodd-Frank Act created something called the Vice Chair for Supervision, who has a specific statutory assignment, which is to oversee all of supervision and also set the agenda for regulation. So the Vice Chair for Supervision, if she wants to propose a change in, for example, the Basel III Accords as implemented in the United States, she has to bring that to the Board of Governors, which is the 7 governors, and vote for it. But she has full control over supervision. So as chair, you know, the whole idea is to be non-political and not, you know, never working for or against any political party or individual, or never even considering things like that. So I think the way the law works is the chair should allow the vice chair for supervision to carry out the role that Congress has assigned to that person by statute. And that's what that is. So you'll see, and you know, the two parties really have a big difference on regulation now. So I like to think that the chair should always be someone who is working without regard to political, and should be therefore a person who can be reappointed by either side. That's always been the case. It's been, you know, Ben Bernanke was reappointed, I was reappointed. And I think it's a good test of the Fed's nonpartisanship that your appeal is really bipartisan. I think that's a critical thing. So if I were to try to impose my personal views on regulation, that really wouldn't work. So I think there's I don't want to say deference, but any chair needs to let the vice chair for supervision take the lead on those issues, and then I'm another voter, is what I am.
Great. So let's talk about Dodd-Frank and the reforms to the financial system. 2008 was a terrible crisis, and there were many efforts made in the years afterwards to tighten the bolts and create a safer financial system, less prone to these kinds of cataclysmic events. But today we look out of the world and we see lots of threats, both inside the formal banking system that you regulate and in the non-bank financial system, which is lightly or not at all regulated. So I wanted to have your thoughts on whether we're in a position of relative safety after all the Dodd-Frank and other reforms following the 2008 financial crisis, or whether the new threats actually have brought us to another period of concern. And just to illustrate with a couple examples, inside the banking system, there's commercial real estate that has fallen in value. That affects both the banking system and non-banking financial institutions. We have the private credit market and a very active debate about its health. We have concerns about cybersecurity in the age of AI. Do you worry that another financial crisis looms out there? Of course, there's always a possibility, but is it something that's an issue of high alert, or do you feel that we're putting all the pieces in the right places?
You know, after the global financial crisis, we actually started a new division called the Division of Financial Stability, and their job is to be, you know, sort of the watchers of all financial stability issues all the time. So we're not, the old system was a crisis arrives, we get the team together and we battle the crisis. This is much more of an ongoing monitoring thing with a framework that can be checked. So I would say after the global financial crisis, which happened when you all were extremely young, between Dodd-Frank and the Basel agreements, we pretty dramatically raised the amount of capital and liquidity that the largest firms and other banks have. And I think that's been a good thing. I think they're also much sort of more transparent and more aware of their risks and that kind of thing. So I think we've significantly hardened the system against the kinds of things that happened in the global financial crisis, where you had a lot of credit losses really around mortgages. And so that kind of a situation, we've got well-capitalized large banks. But that's just one part of the financial system. The capital markets, the US has by far the largest capital markets sector relative to the banking sector. The other countries still have a much bigger banking sector relative to their capital markets. And, you know, that's going to be less well regulated, and that's a good thing. You want it to be the place where biotech companies can do IPOs and they may or may not succeed, but they can get capital out of that market, and you know you're taking a lot of risk, but great things happen because people put money into biotech. So we've done some hardening of that, but we shouldn't be trying to regulate risk out of existence. So I think, and we did fix some of the things that broke in the global financial crisis and the pandemic, we did address. The real thing, though, is the economy, the financial sector is just always evolving rapidly. And I think the vigilance is what you need. You just need to always know that there's another thing coming. And I think in particular, we've had all kinds of financial crises, but we've never really had a successful cyber attack on a large financial utility, let's say, or financial institution. And that would be quite a different thing. You know, if people are going to lose money in a certain part of the economy, we have a hugely resilient financial system now. It's more, let me say this, it's more about resilience than it is about avoiding crises. One of our former people used to say that we're in the levee building business, not the hurricane prevention business, right? So there are going to be hurricanes, and they're going to come, and you just have to assume you won't know what direction or what the nature of it will be. So you want a highly resilient financial system, and we do have that. But again, nobody who's in that business will ever give you a green light. They'll always say, here, these are the risks, and we got to monitor. You mentioned private credit. So private credit is something that as you guys are probably following. It's a relatively small part of a very large asset pool. We're watching it super carefully, as everyone is. We're talking to the people in the industry and investors and everything. I think we understand it. We're monitoring it for looking for things that might lead to greater contagion or greater losses or connections to the banking system. And you know, we're going to do that. You're not going to hear people say, "Oh, there's no problem here," because that's a jinx. But nonetheless, it's something that we're following very carefully.
What is one of your biggest regrets in your time as Fed chair? And on the other hand, what is something that you're very proud of?
You know, on regrets, I don't allow myself the luxury of that. I think it's really important that in my job, I'm focused on the windshield and not the rear view mirror. And so I don't. I'm tempted to say regrets, I've had a few, but then again, not so many, or whatever the line is from that Frank Sinatra song. So I just think I'll have plenty of time for that after I'm out of this role. But honestly, you just have to keep looking at the next thing. You can't be berating yourself for the mistakes that you've made. You're going to make mistakes, and you're going to learn from them. Take it from an expert. I've made plenty. But I don't focus on regrets and things like that. You know, overall, in terms of what I'm proud of, I'm more than happy to talk about that.
Let's go for it.
Yeah, let's go deep there. Basically, I'll just say it's an incredible honor to do public service, as many of you will find out at some point in your life. I always wanted to do some of it. I saw these people around Washington who were well-known public servants like George Shultz. I would think that looks like a really interesting thing to do. It's different, you know. In the private sector, I love my years in the private sector, but there really is a feeling of what you're doing is ideally helping all Americans and that kind of thing. It's a great honor to serve the public, and particularly in a job like this. So that is the main thing I'm proud of is, you know, 14 years at the Fed and 8.5 of them as chair. I'll always be proud of that.
And I'm very grateful to you for your service to our country.
Thank you.
So if you were willing to share publicly some advice that you would give to the next Fed chair, we'd love to hear it.
So one thing you will learn when your children are grown up and they have their own children is never volunteer advice. Only give advice when asked. So, and I would only give advice if asked, and I would do it privately. But I'll just say in general a couple things about the Fed. It is very, very important to stick to your knitting and to stick to the things that were actually assigned. And there's always a temptation to want to move into other areas. And I think we have very powerful tools. They're supposed to be for maximum employment and price stability and financial stability. there's always a time when an administration looks and says, it would be good to use that tool for something else. What if we were just to and call that that's part of the mandate? Happens all the time, and we just have to be in a situation where we're not trying to we're not trying to work against any politician or any administration, but we have to be careful to stick to what we're doing. The other thing is, I'll just note that, the Fed's not a perfect institution. Don't look for perfection. What we do is very challenging and highly uncertain, but it's a great American institution, and I'm very proud to work with the people I work with. They're extraordinary right across the board, an incredible group of people, and I'll just close by saying it's very hard to build great democratic institutions and much easier to bring them down.
So, though you were uncomfortable giving unsolicited advice to your successor, I know that the students in this room would love to hear your advice. They've asked me for my advice and asked me what you would advise them. So they're entering into an uncertain time, an economy where new job formation is lower for many reasons. In particular, jobs that were plentiful a couple of years ago for students coming out of college are no longer so. And AI sits as this remarkable technological transformation that is both promising and existentially threatening. So if you're advising the 600 students that sit here today, what would you suggest they think about as they embark on both academic and then ultimately professional careers?
Let me start by saying that I'm well aware, and my colleagues too are well aware of the current situation for students coming out. It's a time of very low job creation. And also you have AI going on. You've got the effects on job creation of significant changes in immigration policy, which have brought down both demand and supply of workers. The unemployment rate is really low, but that doesn't help you if you're coming into that kind of market. So it's a time when there's a business cycle, right? And you're coming out in the business cycle at a time when getting hired is a little bit challenging. There's also probably something more longer term, more secular that's happening and around technology and AI. So yes, it is a challenging time, but I'll say a couple things. One just is that the US economy compared to other major open economies and big market-based economies around the world is just incredibly dynamic and productive. Since World War II, US, compared to other, again, large, mature economies, our productivity has grown at like twice the speed, for example, in Europe, and higher productivity is the way, compensation and earnings can grow over time. So it's an incredibly flexible and dynamic economy. It reinvents itself. Technology, it always comes from the United States. So just be optimistic about the medium and longer term. I'm very optimistic about the medium and longer term. And the other thing is, my observation is that these large language models make people much more productive. I feel like it's making me more productive because I can learn things really quickly. And I talk to my son and others who are out there in the world, and I think if you use it well, it's making you more productive. So I think you're in a situation where you need to invest the time to really master the use of these new technologies, and that should stand you in good stead. But there's no denying it's a challenging time to enter the labor market, but it may take some patience and all that. But in the longer term, this economy is going to give you great opportunities, and just be a little optimistic about that.
So when you talk about the longer term, are you talking about 10 years, 20 years, 40 years? Are you worried that there'll be wind at our back as we use these tools over the next decade, but at some horizon, let's say 40 years, there'll be substitution rather than complementarity?
It's so hard to say. A lot of people, you talk to business people, are talking about the next few years being big years for AI to come in, but they're mostly talking about existing, middle management, back office jobs and things like that. I don't think it shouldn't have those kinds of effects on people who can use AI well and that kind of, I don't know, but so certainly the next few years look like whatever the effects are, we'll start to feel them, because major US companies, and we talk to a lot of those people who run those companies, and they're all looking at what they can do, and the truth is they can take out a lot of jobs that can be automated by a very smart large language model. They just can, and they will. Because their competitors are doing it, and they can't afford to have higher costs than their competitors.
Stop talking about
What's that going to mean
LLMs. You're
for
making
you?
the market
It
go
may not
down.
mean that much. It depends on what you're going to wind up doing. You may stay in school a little bit, and you may do something that is.
Come on.
It's going to create new jobs too over time.
Yeah,
And again, it
talk
makes
about the
people
new
more productive. I did talk to a CEO in tech world who said
killing me,
the
Smalls,
marginal
you're killing
benefit
me.
of a new employee in
Stop.
this world is actually very high. Now that's not what you hear all the time. So. I don't know. I mean, if you look back through history, to generalize, this has been going on for a couple hundred years. This, since the loom was invented, right, and to put all the people who were doing weaving out of business. But so, in all cases, it has wound up raising productivity and raising living standards, as long as the society keeps producing people who have the skills and aptitudes to benefit from that technology. So. That will be the case here, but you're right, there can be a period during which it's challenging, and this may be one of those, but nonetheless, I would just say it's out there, and it's out there to be done, and I would be medium and longer term very optimistic about this economy compared to any other economy.
Terrific. Thank you so much. We're now going to open it up to your questions. So I think I've got Jason and David in the well, and I've got 2 microphones in the balcony. Why don't we start with, Jason, do you have a question?
I think I have a question.
Okay,
if that's
great, fantastic. We're gonna let Jason ask the first question.
So, Chair Powell, when you're making decisions at the Fed, I'm curious, how much are you relying on very specific economic models? The Fed has its own big fancy model, Furbus. How much are you relying on information you get from talking to people out in the real world, to businesses, your own intuition and experience? What do you bring together as a way of thinking about these decisions, with a role of economics, but everything else that feeds into it?
So it's really all of the above. We have to start with the perimeter. We have the reserve banks are in touch. They're in all 50 states, right? 12 reserve banks, and they bring summaries of these extensive conversations they have with the public sector, the private sector, universities, healthcare, everything in their district. And we see all of that in the beige book and in the meetings. We get all of that. We also look at several models. It's never just the Furbus model. It's many, many different models, and we look at different alternative simulations. You look at all of that, and then we look at where our policy stance is, and we look out the window and we say, does it look like our policy stance is affecting the economy in a way that moves us closer to our goal variables or keeps us at our goal variables? You do all of that. We also talk to each other. I talk to the other 18 participants on the FOMC a couple of times each cycle, and people have different thoughts and ways of thinking about things. Talk to the senior staff. They've been doing this longer than any of us. So all of those things go into it. I wouldn't say, so a good analogy is when I was in the private equity business, we had really good models of companies, and my big boss said, we want to have the best model in the industry, but if you think that model is going to make the decision for you, you're in the wrong business. So the models are just illustrative. We cannot model the U.S. economy with the kind of precision that we will never be able to. Probably. It's like modeling the weather. You can't predict it 2 months away. So it's all of those things, Jason.
Thank you.
Okay, so David, why don't you pick the first hand, and then Jason, you'll get the second hand. And then we'll go to the balcony, so looking for someone upstairs.
Hi, my name is Fabio. I'm a first year studying economics and government. I'm really interested in kind of decision making in the Fed. How do you work with situations where like the decision might be very tight, and like sometimes there's like expectations of like the interest rates increasing, or it might be very tight, and those very tight decisions, like how do you end up making the decision?
So remember, I'm one of 12 voters. So There's an FOMC cycle is about 7 weeks between meetings. We have 8 of them a year. So, and I would say sort of 3 weeks before the meeting, by then, I have to have a pretty good sense of what I think we need to do. And staff will already have been working on, if we're doing anything in particular, we always have like a special topic. So a lot of work is going on. So I almost need to make a decision about the probable thing we're going to do. And then I have to talk to everybody a couple of times because I got to get people to vote for this. And I've got to, a lot of it is finding out where the sentiment of the committee is. I've been working with these people for many years, so most of the time I kind of know how they'll approach a problem. That's how it works. So it's a lot of talking and listening and understanding. I think an underrated skill is in listening to people. Listening is, if you listen to people and you hear them and you can make their argument and they understand that you're actually listening to them and not just, communicating at them, for most of the people, most of the time, that's going to be enough. And by the way, that's true on Capitol Hill. That's true. It was true when I was a governor. If I always felt like Ben Bernanke or Janet were listening to me, and if they could engage with the points I was making, then I felt like I could support what they wanted me to support. So it's a lot of that, though. I mean, it's a lot of committee management. That's the big part of it is to have active dialogues going with all of the FOMC participants, and by the way, also with all the senior staff who've been doing this a very long time, and they bring, in many cases, they bring, history going back many years. For example, in the public communications that we make, somebody who's been doing that for 30 years will tell you don't use that word, even though that word might make sense in another context.
Okay. Over here.
Good morning, Mr. Powell. I wanted to ask you a bit more about private credit markets and particularly rising defaults among non-bank lenders like Blue Owl Capital. So I wanted to ask, to what extent could stress in these private credit markets spill over into the traditional banking system?
So that's the question we ask ourselves quite a bit, and as I mentioned, we're watching very carefully. Of course, what you can read in public. We're also getting the backstory from the people who run these organizations, and from all the banks. The supervisors are well aware of what the bank's exposure is and what is not. And I'm reluctant to say anything that suggests that we're dismissive of the risk, but we're looking for connections to the banking system and things that might result in contagion. We don't see those right now. What we see is a correction going on, and certainly there'll be people losing money and things like that, but it doesn't seem to have the makings of a broader systemic event. But again, we never give a clean bill of health. We just keep watching for that. We don't see those characteristics though right now.
Let's go to the balcony, and remember to share your name when you begin your question. Great.
Hi, my name is Cody. Thank you so much for being here, Mr. Powell. My question is about whether international relations has impact on your decision making. I know you mentioned that the Fed's job is to do exactly what's best objectively for the American economy, but I'm wondering, if you're competing with, let's say China or other powerful countries, whether or not you would kind of, cut interest rates or do something like that to stimulate the economy to kind of get ahead of other countries.
No, it doesn't. We're always asking the question, as you suggest, what we serve the American public always in all of our decisions, and what is best for them. How do we achieve maximum employment and price stability on a sustainable basis? That's what we're always asking. We do, meet with, in Basel, the central banks all meet without the finance ministries. And we can talk privately about what's going on in global financial markets. It is a global economy. We all know each other, and frankly, many of us have regular communications going on just privately, or by telephone, or email, and text, and things like that. But we're never looking to get on the turf of the national security people or the State Department or things like that. We're not looking at things that way. We're looking at our goals. That would be, I think, a classic case of mission creep if we were to say, hey, let's let's deviate from just chasing these two goals and let's do something for a third purpose, that would almost by definition make us less effective at the things we're supposed to be doing, so we try to stick to that.
Okay, great. David, you're next.
Good morning. My name is Jenny, and thank you so much for coming. We're all very honored that you took the time to come. So last lecture, we learned about soft landings and about how it's definitely much more ideal than hard landings, but in the US history, we've had far more hard landings than soft landings. And we were just talking about how it's really important that you are monitoring expected inflation. And I think a lot of that just comes down to the trust between the public and the central bank. And the central bank is known to be much more technocratic, but I think especially with like the rise of populism and previous events, there seems to be a lot of impact of like political tensions between, or cooperation between the Fed chair position and the administration. And I wanted to ask you, how do you still keep the public's trust this way?
By sticking to our jobs and doing them well, ultimately. If we deliver the maximum employment and price stability, or at least are seen to be doing everything we possibly can as we meet various shocks and multiple supply shocks in recent years, the public keeps its faith in us. And if you look, we look at things like longer-term inflation expectations, and you'll see that they've remained pretty well anchored right through all of this. So if you really think inflation is going to be higher, you can make some money betting against that. But people don't do that. The people who are putting their money to work in the financial markets, not to give too much credit to that, but that's it. If we stick to our knitting and we do our jobs, we stay out of politics, stay out of the hot political issues of the day, and just do your job and keep your head down. I think I see this through my dealings with elected people. If they get the sense that you're not there to deliver talking points, you're there to listen to them, and you're really somebody who's committed to doing your job and sticking just to that job, and that's all you want, and you're not going to get into politics, that's what we need to do. And I think generally, I think we are accepted in that spirit in Washington, and I think generally around the country as well.
Jason. Remember to tell us your name.
Thank you, Chair Powell, for being here. My name is Jake. As you know, your term ends in May, and a potential successor, Kevin Warsh, has indicated a desire to cut rates if he fills the role of chair. What is your take on the effect that a cut would have on the flexibility of the Fed to remain well positioned to maintain both sides of its dual mandate, particularly given the fact that inflation has remained elevated above the Fed's 2% target for several years now, and progress is further halted by the oil shock and tariffs especially?
Jake, that's not something I'm gonna swing at, that pitch. Is that a Red Sox jersey, by the way?
I called on him.
Yeah, okay. I know this must be Red Sox country.
So we're going to go to the balcony next.
Hi, my name is Eamon Candido. So earlier you said that you don't know how much you believe in something until someone tries to take it apart. So my question was, what's the thing you currently believe about the economy that you're least confident in?
Interesting question. I'm not going to give you a particular individual thing at the moment, but I will say that I would say this, and of course this is self-serving to an extent, but having worked in the private economy for most of my career, I don't have any predisposition to believe that models can really capture it, because so much of it is animal spirits, as Keynes called it, and also it's again, I go back to the weather. Will we ever be able to predict the weather with any precision three months ahead, other than the seasons? So the economy, no one has been able to really successfully predict the economy. So I think the temptation is always to place too much sort of stock in in models or in one particular outlook. The other thing is, another thing which is a big takeaway is, you know about fat tails, right? So famously there's a normal distribution and the tails are what they are. It's not a normal distribution. The tails are fat, and however fat you think they are, they're fatter than that. The possibility for the economies at any given time is so much broader. For example, the pandemic inflation. We'd spent 15 years with the inflation below target, and that was at a time of QE and lots of fiscal stimulus and that kind of thing. We had inflation below target, and people, pretty much the profession had, the big problem the whole profession was trying to solve was how do we get inflation up to 2%? That was really the problem. And then along comes the pandemic inflation, and bang, suddenly you have a 40-year high inflation. So it's hard to keep your mind open to just how broad the possibilities are.
Okay. Take down here, yes.
Hi, my name is Robert. Thank you so much for being here. I'm a first year studying econ, math, and philosophy. So many economists that I've listened to, at least retroactively, say that what we really needed during the COVID pandemic was around $3 trillion, and the government printed something along $6 trillion more than that. And so inflation rose, but that money is still out there. So if rates come down, obviously you took initiative and you raised them very significantly. If rates get lowered again to, let's say, 2 or so %, do you think that the price spikes have already played out, or do you think that all that extra money being out there will, on top of, instability, geopolitically, do you think that's going to push us back into an inflationary spiral? And then also I was wondering, for your next press conference, are you going to start it with good afternoon or hello everyone?
Let's talk about that later. Sorry, the first question was
the expansion of the money supply.
Yeah, no, so I think monetary quantities are a very challenging way to try to think about inflation and the economy. There was a time when the profession thought that, monetary quantities and inflation were tightly linked, and of course, in an abstract way or in a simple model, it makes sense. If you don't increase the amount of goods and you double the amount of money, then the price has to go up. But there has been relatively little correlation, and my story of the pandemic inflation would not be about monetary quantities mainly. I'm not saying it might not have played a role. It was more, you did have a lot of stimulus, particularly in the United States. At the same time, we were looking at the possibility of another Great Depression. We didn't know whether there would ever be a vaccine. We didn't know what this was going to be. How many millions of people was the disease going to kill? So literally, for the first time probably ever, we're looking at little alternative simulations that are a Great Depression lasting many years. So we did a lot of stimulus. And then when the global economy reopened after shutting down, you had this burst of demand, red hot demand, and constrained supply still. So automobiles is a great example. Everybody wanted a car because they didn't want to take public transportation, and they'd all moved to the suburbs and out of the city. So I need a car, and yet you couldn't make cars because you couldn't get the semiconductors. So you're looking at a vertical supply curve. So a little bit of demand drove prices up a lot. Then, of course, we took the view, my colleagues and I did, that a vertical supply curve works both ways. If a little bit of demand could bring that price right down, and also it won't be vertical forever. It'll start. You'll get supply side healing. You got those two things. It was always both supply and demand for me, and you got inflation coming down very sharply in 23 and 24. We got close to the end of your question. We got pretty close to 2% by the end of 24. Now we were just dealing with the effect of tariffs, which have largely fallen here in the U.S. and not abroad. They've been less than expected because the other side, others didn't retaliate, and also because what was implemented was less than what had been announced. Nonetheless, that was the piece. We were at about 3% inflation, and somewhere between 0.5 and 0.8 of that is from tariffs. So we've been pretty close to 2% all this time. Now we have another supply shock coming. It's one of those times where you get a series of supply shocks. First the pandemic, then the much smaller one from tariffs, and then we're getting now an energy shock. No one knows how big it will be. It's way too early to know. as I mentioned, we do think our policy's in a good place for us to wait and see.
So one last question.
Hi, Mr. Powell. I'm Lola, and I was wondering at what point does the size of the US's debt break the point of natural systems repayment, and if that's something you're worried about now, or something you think our generation should look out for?
I don't think we know what that number is, sort of ratio of debt to GDP, where it would be a problem. There are, of course, Japan being a great example, there are countries that have much higher levels of sovereign debt to their GDP than we do. What's clear is that our debt is growing much faster. The federal government debt is growing substantially faster than our economy, and that ratio is going up, and in the long run, that's kind of the definition of unsustainable. The level of the debt is not unsustainable, but the path is not sustainable. And so it's really important that we get back to, we don't have to pay the debt down, we just need to have primary balance and begin to have the economy actually growing better, growing more quickly than the economy. It will not end well if we don't do something fairly soon. This is not the Fed's job, of course, and I pretty much limit myself to those high-level points which essentially everyone ignores.
So we're going to thank Chair Powell, but let me just describe the sequence of events that now follows. So first we'll thank Chair Powell. Then anyone who wants to is welcome to join us on the stage, and we'll take a group photo with Chair Powell. Because of a tight schedule, there can't be any selfies, because if there's one selfie, there's 600 selfies. Right. So you'll need to make do with one photograph of the entire class with our esteemed guest. But before we do that, please join me in warmly thanking Chair Powell. Now, come up on stage.
Only if I choose something.
All right, folks, that was the conference with Powell. He didn't do anything good for the markets, as usual. NASDAQ is flat, the S&P is mildly up, the Dow is holding, and the Russell is down 0.5%. Gold is holding flat, silver is kind of flat from where it was this morning. I mean, like, not much just been changing. It doesn't look like a few pennies here and there, but the market's pretty kind of bum right now. I'm going to take a break for a little while, and I will see you tomorrow, most likely. I'm looking at going long on Uber, so I like Uber long from here. I also kind of like AMT. I've been looking at AMT, American Tower Corp. They're pretty low. They have a dividend coming up. They have a history of dividend increases. I think they belong at about 220. I like AMT, and I was looking at Procter and Gamble. I think they also are due for a rebound as well. So I like those two, and I think I want to reposition some of my stuff there. I don't know. I have technology has just not been coming back yet. It probably will, but we're at the bottom here on this chart. So if we don't hold, it could really collapse. When we talk about technology, of course, you're talking about NVIDIA, and that's a big portion of the market. I don't know that NVIDIA is going to collapse much further from here, but it is the potential. Microsoft is holding, but it's also low, and I would expect it to probably pull back to the bottom. I just don't see why it's not. Oracle is at 140. This is sort of a bottom for it. 120 is the direction it's going toward as well. I'm not certain. I'm not selling or buying or anything with Oracle. I don't know. I don't have a good point from here. It should go back up. Should being the operative word. So, I'm going to look for some other opportunities. I think gold is going to work its way back up. You look at Barrett Gold, and I think that's good. Or maybe core mining, also good. So I like those as well. And that's I think what I'm looking at.